All right, welcome to Momentum Mode. Corey here with Mike, as usual. And Mike, this is our first ever remote video episode as opposed to having everyone in person. We got to get with the times, and sometimes we got to get online. So we're not in the same room for recording for once. Yeah, breaking new ground for us, right? And some people think we're silly for not breaking this ground yet. Anyway, but today we are joined by a guest, a good friend of mine, John Moakley. John, how you doing?
Good, Corey. Happy to be your guinea pig.
That's right. Our first, well, you know, and part of the reason to John is those who've listened to other episodes know Mike and I are in Chicago. John's actually on the East Coast in Jersey. And of course, we couldn't have somebody like him make him fly into Chicago just to record an episode, right? And John and I go way back, but John's got a ton of experience in building data teams, running data teams, data businesses, working with private equity firms, acting as chairman for private equity-backed companies. And so it just thought it would be a great conversation to explore a little bit about, you know, different things people should think about, especially as AI and data and all the data background you've got. So why don't we start out with, John, why don't you just give us a little background of yourself, kind of orient everyone as to who exactly you are.
Sure. I'll try to keep it short and sweet. It's not overly exciting, at least the part that I'll share anyway.
There we go.
Background, I think, Corey, you mentioned it earlier when we were talking. I've been in data before. Big data was data. Started in a consulting firm, supply chain, worked my way into, believe it or not, the magazine business.
Yeah.
You got a magazine for anybody who remembers what that was. And you know, they were looking for some young guy to basically collect all the data they were literally throwing away on their customers and build them. You know, at the time we were calling it a database marketing effort, CRM effort. And we were doing modeling at that point. We're hiring statisticians. We were essentially doing data science in the late 90s, early 2000s. Before that was, you know, something that folks called data science. We called them statisticians at the time. Moved on, actually. TV Guide got bought by Gemstar. Gemstar then was looking to do things corporately with data. And at that time, that's when Corey and I crossed paths, when Macrovision acquired Gemstar. And the data business at that time was literally just all internal. I had been talking to executives at Gemstar saying, hey, look, we have data across this company that we really should be monetizing. And folks just didn't see it. But Fred Amoroso, the CEO of Macrovision at the time, actually did. And so we embarked on, it was probably mid-2000s, essentially creating a data business. And we started with a metadata business, moved into analytics. At the time, we were calling it search and rec. We moved into more, I'd call it predictive analytics. We were getting set-top box data. We were acquiring some companies and built ourselves a really nice data business by the time I left that spanned the gamut. You know, we were doing, you know, I'd say 70 million in revenue at the time, and
closer to 100
employees across the globe. We were in Asia, we were in Europe, we were in North and South America. We were pretty much everywhere. When I left in 2015, right before the TiVo acquisition, you know, I figured I would take some time to spend with my little kids, and wound up working with a private equity firm in New York City, and it turned into a wonderful opportunity where I spent quite a bit of time just looking at companies in the space. And we can talk about it later, but you know, what I found was, I think I was a little bit of a unicorn for those folks, because I wasn't looking for my next CEO gig necessarily. And so I was looking for something where if it was my money, would I put it to work? And over time, I think I looked at over 200 different companies before we settled on a company in 2022 called Resonate in Reston, Virginia. I didn't know it at the time, but the partners at the firm had told me after we closed on Resonate, I had a nickname running through the firm. It was called Dr. No, because literally everything they would send to me, I would say, no, we can't do it for XYZ reason. Most of the time it would be one of two categories, I would say. It would be either the valuation just wasn't right, things were crazy, or, you know, we could talk about this later as well. In the data world, there's a lot of promises and a lot of vaporware and not a lot of real meat there. And so there's also some, I think, rightfully placed bad rap on a lot of data companies, because there's been a history of, you know, go follow it from DSPs on through, of over-promising and under-delivering. And so, you know, that's something that, you know, frankly, I saw a lot of firsthand looking at these companies, and frankly, something that we're trying to cut through now with, you know, with the company we have today.
You know, in there, you breezed over it, but for those that didn't totally catch it, yes, John was at the TV Guide magazine. For those that are old enough to remember it, and for those not, yes, there was an actual magazine you used to get that would tell you what was on TV. We just had this
By the way,
moment.
Corey, it still exists.
I
It
know, and
still
it's still the
exists
private
in
equity firm we
form.
sold it to that still has it. So they're
It
still making money.
It is still out there. They have. I looked at it today just because I knew we might talk about it. They still have over a couple of million subscribers, which I find mind-boggling, but it still exists.
No, I probably
Does it come
related
out
to some
weekly?
of those.
Like it's got to update.
It
I
comes
remember
out,
the TV Guide button, but not the magazine.
As I understood, when I had left the magazine in the early 2000s, they were moving to, in some cases, to save money, do 2-week versions of the magazine. So it was probably like doing 40 issues a year instead of 52. I think, and somebody can look at this afterwards. I think it's now not necessarily weekly, but more along the lines of every other week. But I
something like that.
Yeah.
Yeah. I mean, we for the, when we were at Macrovision, which became Rovi, we actually divested of TV Guide magazine for $1. We sold it to a private equity firm, but they also took on $125 million subscriber liability. But anyway, the point I was going after, though, is so you're at TV Guide. They had all this data. Gemstar TV Guide, the company was called Gemstar TV Guide. They were owned by News Corp. News Corp decides to sell the asset. I'm sitting on the other side at Macrovision. We were looking for a transformational opportunity. We had a lot of cash. We had a really good balance sheet. And I just remember we went to a day-long set of meetings at Gemstar on due diligence. And all these people are getting up there, and the magazine guy's getting up there, and everybody's like oohing and ahhing and turning to us like, aren't you guys excited? We're like, not really. And then they're like, and then here's the TV Guide network. Ooh, isn't this great? Yeah, not really. And they're like, oh, here's the data guy. We're like, ooh, like we're getting excited. When you left, we were, Fred, Eric Free, and I were like, we got to talk to that guy more. So it's like data, but you undersold yourself.
In that meeting, Corey, I said something that I'm surprised I didn't get spanked for, which was I walked in the room and said, guys, this is the biggest hidden gem.
Yes,
in everything you're looking at. In other words, these folks aren't valuing this thing the way they should. I had like 10 or 15 minutes to chat, right, and I almost got cut from the agenda. But I do remember that it wasn't seen. Folks knew data was valuable, but they were looking at it in a lot of ways. It's parallel with some discussions you have on AI today, where it wasn't looked at as something that could generate real revenue. It was looked at something that maybe can help us figure out how we can save some expenses by doing better, more efficient marketing. Who knows how we'd go about it. But they weren't looking at this as a data as itself as a product. Right.
So that's actually where I was going with this. Is what made you see that there was value in the data that someone would buy? Did you have a prospect say, "I'd pay for this"? Did you just go, "Wait a minute, there's so much value"? What took you down that path?
What initially took me down the path was there was just the old way the magazine business worked is they had these mailing lists that our folks would pay a fortune for, right? And I remember looking at these mailing lists and going, they're just getting names and addresses. And I remember saying, well, why aren't we selling our names and addresses, right? If folks want to buy this, we're selling one thing, a TV Guide magazine. It's not like TV Guide magazine is going to be competitive with anything else that's going to be on the list. Why aren't we selling that? And folks we started doing it, right? And then I started looking at it and saying, well, and we were buying data at the time in early 2000 from Experian and putting demographics against it to do modeling. And I started thinking about, all this modeling work we're doing, why aren't we doing scoring and figuring out across the magazine industry how to help them if their file crosses with our file? No one else was doing this. And it just was, they were doing it already. It isn't like I had some kind of ingenious idea. You literally saw them selling mailing lists, which were coming out of like phone books. Why couldn't we just do it electronically? And then, when I went to Radnor, I was in New York City for a while, and you looked at all the information they had on television programming and when it was airing and how long it aired for and whether or not it did air. You started to look at that time, not to age myself, but that stuff was just moving to the internet. It's like, wow, there are a lot more companies than just the newspapers who may want this, right? Why aren't we putting this stuff out there? Cable, electronic interactive program guides were starting to become a thing. So you just saw it happening. right? You could just see when you saw the little taste of how folks were selling data, in the 80s and 90s. Once the internet hit, it's like, well, why aren't we selling data on the web, right? It's going to be, and it opens up many more customers for this stuff than maybe there were, really, frankly, they were just thinking about it in terms of the Sunday circulars, right? And so that's really how it started.
Can I pose a question to both of you just real quick on this? Because when I hear stories like that, and I wasn't like in the industry at that time, right? I was probably in high school, maybe grade school. I don't know.
You were in high school, yeah. But you were.
Okay. So you think about times like that where it's like John comes in and says, hey, Corey and team, this is the biggest hidden gem, and nobody's valuing the data that's sitting latent right here. And so when I hear stories like that, I always try to think about, present day, like, well, what is the thing that's sitting latent that none of us are thinking about today? And so is there an analog somewhere to what the two of you are seeing in industry today of like, is there something people should be paying more attention to that's not getting the value it is?
That's a great question, Mike, and Corey, I'll jump in. And like when we first started, I'll answer this question in two parts. When I first started looking at assets, companies, 2015, 2016 with private equity folks, one of our theses were, hey, look, data, companies that have data as an exhaust, right? Have data but aren't monetizing it. That's a great application. That's kind of the things we want to invest in. And by 2015, 2016, that was mostly over. Folks kind of had an idea of the value of data. And even if they weren't monetizing it, they weren't giving it up, right? Or they were putting value on it that was crazy, right? They didn't understand it, but they knew it wasn't worth anything. It wasn't worth nothing. I will say it gets a lot of press today. And, for me, AI is definitely that I'll call it that, area where that's going to happen. I just don't know anyone who, I think it is so broad right now, and it has so many applications that it's really hard to predict, where it's going to go. Now, you can predict where the value is going to be, but it's moving so fast. I'll give you an example. And this is the world according to John. I could be dead wrong. My thinking, and the CEO of our company, Resonate, kind of thinks the same way. If you're using AI to try to really reduce costs, which you should do internally anyway, right, for your own operations. But if you think you're building a business that's going to be an AI solution that's primarily being driven to reduce cost, I don't know that that's going to last very long. Because I think what we're seeing happen, one, the cycles that happened in the late 90s and early 2000s of how the web compressed everything, now it's logarithmic, right? AI is happening even faster, right? And the first folks who do it could make a nice business out of doing, select applications. You could look across companies, legacy billion-dollar companies, and the benefits you can provide them with AI are immense. But will you be able to build a sustainable 5, 10, 15, 20-year AI software solutions business that's focusing on those things? I don't know. My guess is probably not, for two reasons. One, you're going to save the costs and they're going to be done. And two, I think the competition as time goes by, it used to be you had to have some investment. You had to have venture investment. You had to have a private equity firm give you XYZ millions of dollars to hire a team to go do certain things. In the world of AI, you need a couple smart guys, right? And some software, very minimal investment. And so the competition can just be growing out of the ground against you. And in a lot of cases, if it can be commoditized, it will, and it will be faster. Right? To me, I think, and this is where I start getting over my skis, and it's some of the stuff we're starting to play with at Resonate. It's about how do you use AI to really learn and grow and to generate additional value and revenue. So if you're a data business, how do you get it to be seeing things that maybe your data scientists couldn't see and put it in a product, put it in whether it's an insights platform, and allow folks to iterate faster, learn faster, do things faster. And when you do things faster, you can fail faster and then figure out what's right and then put it out there and make money. The stuff that's happening with agentic AI, the stuff I know our friend John is doing, that all to me is like where you really need to go. There are times I say, and maybe this is just because I've got too much gray hair on my head. There are times I think, wow, it's really, really exciting and it's really, really frightening at the same time, right? Because this can go in so many different directions. And if you meet someone who tells you they know exactly how it's going to go, I'm going to tell you they're full of you know what. But to me, to answer your question in a short way, Mike, I think it's AI. I think you just got to be very, very smart about how you apply it, because it's going to touch almost everything.
Well, and I think there's a lot of companies that know they have data that have value, that has value, but they don't know how to pivot the organization to sell it. I mean, I think that's exactly the analogy you gave, or it's analogous to what the example you gave with Gemstar, which was their business was advertising. Their business was, getting carriage and getting advertising dollars, and they didn't know how to pivot the business to suddenly license this other asset because it was kind of in conflict with this advertising business, which they were giving away as value add at the time, right? And I see the exact same thing in businesses today, where they might have data, the exhaust, and I'm sure, John, as you've evaluated companies, you've seen a lot that have, oh yeah, this is valuable data, but they don't know how to go to market with it. They don't know how to pivot the business, or it's just too different than what they do, and it might hurt the existing business.
Corey, right? Resonate had some aspect of that where when we looked at them, and in 2022, they were really, the tech at Resonate, the company is just fantastic, right? I'll throw bouquets at it.
You're required to say that. Come on now.
I'll take you for a walk. You meet these executives, and you look, and frankly, when you talk about why you invest, a lot of times you invest. One, they have a great product. Two, they have really smart executives. And three, that they had that aspect of, when I was looking at it, they were pointing more in the world of research. And I was thinking about, wow, all this stuff that they have underneath, first party data, stuff they do on their own panels, plus the tech they have to accumulate and really be able to tell you what consumers are doing and why they're doing it. That data to me was truly exciting. And how you productize it, we took about a year or two to figure it out. But now it's, as our CEO will say, he goes, I don't even want to call us a data company. We're a data creation company, right? We're an analytics data creation company. And so there's that pivot, right? And, I didn't even think of it, Corey, until you just said it, but really there is that kind of pivot, and the company's been going through it. And it's also, the things you learn every time you embark on something, right? And one of the things I realized I underestimated was the level of change that it took to do that in my past life. I kind of maybe just had, blacked it out, but it's not just the, hey, well, it's going to take from this business or that business, because I don't even think in the world of Resonate that the two things are competitive or will cannibalize each other. They're just perfect, compadres. But it's culture, right? People think about, hey, look, this is what we are, and we're talking about being something different. Is that good? Is that bad? And if you walk folks through that very well, and I'm not saying we did or we didn't, but I think we underestimated, and Resonate has a very strong, good culture that, you know how those young tech firms are, they'll take the hill, right? And that's where they are, but they were taking a different hill, right? And now we're asking them to look at a different one. It just requires better communication, right? And explaining why we're doing these things and so on. But it's not just about, pivoting. It's also about bringing the people along, and not just the executives get it, but then making sure that, the employees underneath who have to execute the job day to day follow that, understand why they're going to take that hill. And once they do, then they go take it.
So let's pivot a little bit to, as you move further along, you talk about you worked with CMC for many years to look at a company. Give listeners an insight view. What happens in a private equity firm when you're looking at companies? Like, what, and is it, how do they get to you? What did you, and you said you were Dr. No or Mr. No, because you said, like, what did you look at that you'd say, like, no right away? So give us some of that inside view.
How it got to, like, I can't speak to, ZMC has been around for 20 some odd years. Strauss Zelnick is the founder. He's very, very well known. I mean, if you don't know Strauss, you just type in his name, you'll see he's a very, very impressive human being. And so Strauss and ZMC are very well known across the tech industry. Strauss runs Take-Two, for instance, and it's part of the portfolio. And so they know what ZMC is looking for, and media, tech, that's the space. So companies just come in to ZMC all the time. And I was working with a set of professionals at ZMC, still do, where literally it would be on as they came in, here's the SIM, What do you think, John? Here's the SIM. What do you think, John? And I always erred on
SIM for the audience. The SIM is
the company information management report. It's basically the document that the company dolls up to say, we're out looking for somebody to make an investment, and you have to read everything that's in these SIMs with a little bit of grain of salt because it's the sales pitch, right? It's the company sales pitch on who we are, why we're going to win. Here's our revenue curve. Here's everything else. And by the way, revenue in the next 3 years is going to be a hockey stick, every one of them. So you learn how to read them. Frankly, the best thing about it that I got from it was you always took the first meeting. If you're getting unless you just knew the company and knew it was a no-go, I would say 90+%, even if I had doubts, I'd say take the meeting, spend the hour, right? Listen to what they're talking about. You don't know what you'll pick up. And so over the years, you started getting a real understanding. And today, that if you see AI in any of these reports or presentations now, you take that with a grain of salt because everybody's stickered AI on everything they do. Companies are becoming .ai and slap that on. But back then it was machine learning and big data, and you'd see that everywhere. And the first thing,
John, you're hurting me here as you say this, because I sold a tech company to a private equity group, and every time the private equity group took the meeting, we thought we're the only meeting they're taking, and this is great that they took the meeting.
No,
you tell me you took them all.
I took them all. Now, frankly, I think they need, for private equity to work, you really need to have, because it's sometimes hard. There were, I'd say let's just say the number was 200. I would say of the 200, I got down the road on probably 20 to 25 over that period of time, which is a lot.
And down the road went all the way, to term sheet, or like how many? I understand the first meeting
I'd
thing,
say
but beyond
that 20 to 25 got to where we were putting in term sheets and bidding, and a couple of real competitive where we wanted to win them and didn't.
Yeah. So you're 5 or 6 meetings in at that point.
Yes, for sure. And I'd say data rooms probably had 20. When I say perfect way to think of it is 20 or 25 where we had data rooms and we were opening up data rooms and looking at some real stuff, right? And so of those 200, after a while, you would think, okay, I could tell what's BS and what's not. And it's hard, right?
Yeah. And the data room for the audience is basically when the hood has been opened up and the company puts all the relevant information
back-end information that goes in. You could see sales, you could see, a lot of information on how they're actually building their product, architecture,
employees.
Employees, everything. You're getting to see.
So you can put lipstick up on the company information packet that gets John to the first meeting, but by the data room, everything's out in the open, and that's where
even
deals
when you
can
get to
fall apart.
the data room, it sometimes takes a little bit of work to realize, okay, this is a little bit of it. This is either a lipstick on a pig situation, or it's even trickier. It's like, hey, wait a minute. Okay, this is a good company now, right? But if we're going to acquire it, how do we make it an even better company, right? Because you're going to be, in a lot of cases, you're paying for all the growth that's happened. And in some cases, you might even pay for a little bit of future growth, right?
Yep.
And so everything that you're acquiring to be successful is you have to increase that growth curve. And in some cases, it might not have even been an instance of where the company was the issue. It was the market or the way they were going. And do they really have a moat to protect themselves from further competition? So you have to keep thinking those things. And I always had the lens of, and I did. I had my money up. When we were going to go, I was investing alongside ZMC.
Yeah.
I wanted to be in, right? Because that's how if I believe in it, put skin in the game for sure. And it just became. You start to get desensitized a little bit when you go 8 years, right? But at the same time, it was one really enriching, educating, and the folks at CMC as well were great folks to work with. That never once did I ever have, somebody come and say, "Hey, John, it's been 5 years, it's been 6 years, it's been 7 years, it's been 8 years." It's like, guys, they're like, "We love this. When you find the right one, you'll know," right? It's like you don't really see people like that. And when we found Resonate, I'll be honest, the SIM, I sent, and that's when I found out I was Dr. No. I'll let you know a little secret. I sent an email out, and it was just an email like, "Yes, basically saying, hey, take the meeting." And I was meeting with a couple, I think the two partners at the time, and they said, "Oh, the guys, the guys working this deal read your email. They realize you're not happy with it because I think they were reading my translation meaning just take the meeting. If I really like something, I'm like, yes, get on this." And I just said take the meeting. And I said, no, I don't not like it, but it reads like any other data company. And I really want to find out if the tech is real. And I really want to find. And as we kept digging, I kept saying to myself, is this real? They're passing every test, right? And if this is real, we have to have this company, right? Because we could do these things. And so that's how that happened. But I think to answer your question, Corey, it was literally just doing meeting after meeting, pouring through. There's a lot of stuff out there where, frankly, and then once you acquire a company like Resonate, you get bombarded with all companies kind of either in the space or along the space
right.
who are looking for investment, or in a lot of cases, private equity is not going to invest in something that, say, venture is going to do. So, you're looking for a little bit of a more mature company. So now you're getting companies that are not necessarily the right fit for private equity, but frankly, you still want to understand them and stay close to them because they may grow into being a private equity firm. And so there's all that kind of cultivating that goes on as you're doing this, and stuff, frankly, that I learned on the fly, right? Because I was an operating, my career was operations for 25 years, and now the last 10, it's been doing this stuff.
So when you say not quite a private equity company, what makes someone a private equity company versus a venture backable company?
And I could be wrong here. I think when you have
in your experience,
my experience is when we don't have room to fail in private equity, right? I think if you're making an investment in companies and you're going to put, tens of millions, if not hundreds of millions into it, and ZMC works different than maybe, say, the larger companies do. I think one of the things I didn't share, ZMC prides itself on we have these theories that we invest in, AI being one, data, big data, all that kind of stuff, and we'll test the theory and look for headwinds or tailwinds and make adjustments. But we have these theories, and when you listen to the folks at CMC, we don't make many bets, right? And we want to have the operators who can sit side by side with these folks, or folks who are professionals at CMC who can help truly work with these companies. And I'll say it, when prospective companies are coming through, it can sound scary. Great, they want to get involved, right? But it's more along the lines of, hey, look, a guy like Strauss has so many contacts across the industry. You could be the best unknown thing. You want to leverage, from a business development perspective, the firm in that way. Hey, John knows data. If we're going to be he can help you figure out how to scale it. So let the company have those resources to help the next level of growth and use it that way. So in this instance, private equity, don't place many bets. So if you're placing at any one time, you have 6 to 8 to 9 companies, a fund isn't going to do well if 2 or 3 or 4 of them miss, right? Whereas in venture, the way I understand it is you can make a lot more, you can make smaller bets, but many of them, and when they hit for a lot, a much bigger multiple, and so you can absorb, you can take risk where private equity might not be able to take as much risk, is the way I would frame it.
And I'd add to it just different stage, right? Venture tends to be much early in their life cycle, which is why you could put a smaller amount of money into the company, but it's a bigger risk, to where you're looking at a more de-risked firm, meaning it's established, larger, more substantial. Typically, a venture back or a private equity company is profitable. Venture back companies are typically not profitable upon the initial. Mike, that matches your experience, right? You had all the private equity meetings, right?
Well, yeah. So, back to the earlier joke, we were excited every time John took the meeting, but a number. By
the way,
I
wrote down to myself, Mike, was that your experience with private equity? Because I remember this.
Well, so we went through a few retrades. I mean, we had a 3-year period where we were almost selling. And John, some of the context, I started and ran an education tech company in primarily the higher ed market, and we were in our 12th or 13th year since starting. We're going through the sale process. There's an interesting dichotomy here that's going through my mind as both of you talk, which is to be private equity level, right? The company has to have had a certain level of success and obviously run as a well operating company. But then you're also looking for this like latent value that hasn't been tapped into. which
Yeah.
is somewhat, that's the dichotomy, is like the company
Yes.
has to, in some sense, have been underperforming as they got to this high performance so that you can take it to the next level and optimize. A somewhat backhanded compliment I received once on a deal that fell apart was, we don't think there's much more operational efficiency that we can pull out of your company. They didn't like our market, but they're like, we think you guys are operating it at a level that is probably driving the numbers higher than they should be. Which I'm not patting myself on the back, but that was just like kind of a comment on our market. So when you're looking at this, you want to find the right management team, right? But then you also want to find this latent value that you think you can squeeze more out of, right? Or not squeeze out of, but make more efficient. So how do you assess that side of like, could the thing be operating better?
In the instance of Resonate, it was like, hey, look, I see much more opportunity with the data assets that they haven't productized, right? And so there's and we'll typically go in with 2 or 3 things that we think can be the next rockets, right? And we really need one of them, right? And that would, for us, there was expanding into new verticals. There was some addition of some new data sets, maybe, and then there was just productizing the data. And we've gone big on productizing the data. The other aspect of this too, and by the way, the piece you mentioned there, Mike, that I think is critical is, and again, I had the luxury of being able to take 8 years to kind of look around and make the right bet, so to speak. I hate using the word bet because it sounds very risky, and I'd like to think we've de-risked it enough. But the management team is critical. And what I mean by that is a management team I may think is great and will work great with me and with the folks at CMC might not work great with other folks. Doesn't mean they're not good, but it means as human beings, you've got to find folks that are going to work together well. Because as you're embarking on this, right? I remember saying to Brian, I think at one point, I've never seen a strategy that went from A to B. They always go like this, right? And you have to be able to pivot, one time after another. And the other thing I remember saying to Brian, because his charts all went up and to the right, and I remember our data business was up and to the right, and while I was doing it, it never felt like it was up to the right. It always felt like a rock fight. And, all these analogies, duck on a pond, right? It looks like it's easy, but it's brutal. And I remember looking at Brian and going, yeah, this looks beautiful, huh? Must have been really easy. And he laughed at me. And I said, I know. And it's going to not be any easier because we expect that, we had set, nice high aspirations for this business. But you have to have people who are set with the right goals, who are committed, right? In a lot of cases, you're looking at, some cases you're looking at firms and you're going, all right, we don't want this executive team, but we like the business. Or in other cases, you want the executive team, but you're worried once they get paid, they're gone, right? And then what do you have? There's all those different aspects to it. And so that all, applies. I always think you could find good, valuable people if you have a good strategy, but I think if you get them together, it allows you to move so much faster. The only other piece to what you were talking about there, Mike, is that private equity can do, and I was just talking to a firm today that has done this pretty successfully. There was roll-ups, right? You can say, hey, look, you know what? There are 2 or 3 or 4 folks who are doing pretty well in this space, but they're going to beat the snot out of each other, and the market isn't that big. Why don't we suck them all up, right? And make it the growth might not be much better than all 4 of them combined, but we can make them much more profitable, and that's going to be worth a lot more than the 4 of them separate, or so on and so forth. So there's those opportunities too that I think private equity sometimes plays in if the firm is large enough.
So it's not just operating efficiency. It's, can you see other revenue potential that's going to drive the value of the company? Can you see pieces to put together with it that's going to drive the value of the company? So Mike, when they told you it was just operating efficiency, it's because they didn't see any other upside value.
Right. Yeah, there's a lot going on.
Yeah.
You had a successful exit, right, Mike?
Yeah, they did good.
We got it there. But
So
going through the scrutiny, I mean, the data room and all that, like you learn it just a ton about. You think you knew how to build a business, and then you go through the scrutiny of private equity, analyst team. And I mean, what a growth experience for a team of founders or any operators to go through. Because now, I'm on my second venture and we're in the wealth tech space, and there's a ton of this, PE roll-up happening with the RIAs. And to be at the starting line with the perspective of what happens at the finish line, per se, the exit, it's like a PhD.
Yeah.
Well, John, I greatly appreciate you taking our maiden voyage on a remote episode here. I know I could, you and I could go on forever, and we bring Mike along for the ride, but we'll let our audience settle there, and hope to have you back another time to talk more. We barely even got into the AI stuff, so we'll have you back.
I appreciate it, Corey. Thanks for the invite.
Thanks.
Thanks, John.